what is happening, everyone? How is it going? So, big news today. Fidelity announced they are going to issue debit cards and other investing and savings accounts to children 13 to 17 years old. Yeah, that's right. They're going to allow 13-year-olds to trade on the stock market and get wrecked by all the hedge fund managers that control Robinhood and tried to stop the Wall Street bettors community from buying any more GameStop stock so they can line their greedy pockets with even more and more money. Just kidding, guys. They are, though, going to start allowing the children of the current customers only, their current customers, so you have to be a Fidelity customer for this to happen. If that your parent or guardian, invest with Fidelity. This is not a fertility announcement. This is Fidelity to have a youth account. So the accounts, they'll come with oversight. The parents will retain the right to close the account at any time and can sign up for alerts on the child's transactions. So, they can't go in investing in, Playboy or anything like crazy. They are teenagers, right? So the new teen youth accounts are entered in by the parents. And once the account is transferred to the teen, it allows the teen to fully execute the trades. Cue the chance of Dogecoin to the moon. Not so fast. Fidelity said that these accounts will let teens buy and sell U.S. stocks by themselves, the Fidelity mutual funds as well, and some ETFs, but will not allow them to YOLO into the riskier investments. The difference from this to what many other brokerages do is they don't allow people under the age of to enter into people that are under the age of being able to enter into a legal contract, which is most often 18 years old. And this is also going to differ from like Fidelity's current custodial accounts, which is where they allow teenagers to have accounts, but the investments are made by the parents or the guardian on behalf of the children. These accounts, though, once the child does turn 18 or the teenager, 13 to 17-year-old does turn 18, it'll transfer over to a standard brokerage account. So the move by Fidelity, which is like one of the biggest brokerages in the nation and the largest server of 401k plans, is sending a clear message. They don't have enough money, and there are 27 million teens in the United States, and they want all of their money for the rest of their lives. No, you'd have to read between the lines to hear it say that one. What I heard, in all seriousness, guys, they have no limit on how much or how often a teen can trade. They won't allow them to buy or sell cryptocurrencies, stock options, or other ETFs that use large leverage amounts that will supercharge gains or losses. They will also not be allowed to trade options, to borrow on margin, and the accounts will be capped at $30,000 in deposits per year. The good thing is that they will not charge any account fees. So you won't have any commission trades, no minimum balances will be required. Similar to the other fee-free exchanges, the brokerage trades, the brokers will just make their money on the bid-ask spread, basically, which is the price, they tell you the stock is worth versus the price the person selling it's for. So in simple terms, let's say someone wants to sell stock for $2 a share, and Fidelity will tell you the stock is selling for $2.02 a share. And when you buy the stock for $2.02, Fidelity buys it from the seller for $2 and then sells it for you for the $2.02. And they get to keep the 2 cents. It sounds criminal, but it's standard practice nowadays. It makes it easier for you to kind of calculate what you're investing into a stock, and it's simple for you to make the transaction happen. The problem is most lawmakers say it's too simple. Right? And by making the process simple, it encourages investors to make riskier trades. I'm guessing that's why they make it so complicated to re-register your car at the DMV. If it was too simple, it would encourage too many people to drive, and we'd look like this. The encouraging thing with the Fidelity accounts is that it is going to be a way to teach younger kids the importance of financial education and investments at a younger and younger age. And in an effort to improve the younger generation's financial IQs, the youth accounts will provide educational material to the teenagers, teaching them about finances. I think overall, this is a good thing. It can be a good thing if you're teaching your children how to invest, if you're being responsible, you are monitoring this, but also allowing the child to have the flexibility of what they want to invest in, and to kind of see what happens when they do make these investments, how their money grows and or goes down, and the importance of researching and really understanding what you're getting into before you just YOLO into it and think that you're a Wolf of Wall Street. But with that said, I'm curious to see what you guys' opinions are. Is this something you guys would put your kids in? Was this something you would allow your kids to do? Do you think it's a little too early for them to go? I'm curious. I have kids of my own. They're not of age yet to do this, but I'm interested to hear you guys' opinions on what you think. If you like it, subscribe, smash the little button down there, and just let's keep this stuff going, guys. I want to keep giving you guys as much info as I possibly can. So let me know in the comments if you guys like this stuff, you want to hear more about it, you want a little bit more about investing, anything you guys are interested in. Just smash the like button. It really helps me out, helps with the algorithm, helps me get more than I think about 10 views now, or 2 per video. Yeah, guys, I appreciate it. Thanks so much, and look forward to the next one.